Hey traders, welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, October the 4th, 2009. Folks, last week we left off with a bearish call on the market. Let's get to the charts right away. I only have about 10 minutes here to speak with you, so I want to take advantage of it. The S&P 500 last week found rock solid resistance at the 1050 level. That's the resistance level to watch going forward. I do believe that we're going to see more downward movement in the market. We might see a counter trend rally coming into this week and another attempt to try to break through that 1050 level, because remember, we have bank earnings coming not this week, the following week. So what they're going to want to do is they're going to want to try to get the market excited and try to get people to buy going into earnings. So be careful going into this week. You may want to take some profits in some of your short positions. Like we have profits in bond-bound stores right now. We may take half the profits off the table. I don't know yet. I'm going to send an alert to my members in the morning, letting them know. So keep an eye on the S&P 500. This is the weekly chart. We're threatening that lower band of the uptrend line. So be very, very careful. The transports, they continue to roll over. They broke that uptrend line. So they're in very dangerous territory. You need the transports to help the market continue higher. Retail, very, very bearish last week. This is a major, major concern. This candlestick pattern that you're seeing here, that's a key reversal, meaning it attempted to move through that 200-week moving average. It was met with sellers again. That's the second week in a row. Be very, very careful. You need the consumer. Without the consumer, the markets cannot rally. Now, we're going to look at the stocks. Now, remember, it's been the technology and the financial sectors and the retail sectors that have kept this market moving higher. And the stocks last week had an extremely bearish week. If we see another lower low, meaning we make a lower low than we did last week. The low last week was 305.67 on the stocks. The stocks that's the semiconductors. You need the semiconductors to make that NASDAQ move higher. They've been leaders. If it fails and it breaks below last week's low of 305.67, you need to get out of this of the NASDAQ. You can't be long these stocks. So please be very, very careful. The financial sector. This is what leads me to believe that we're going to see some manipulation last week. We found resistance at the 15 level, 1544 level last week. I'm sorry, less than that. We found about the 15 level last week. I apologize. We found support at the 14 level. It looks like what they're going to try to do is they're going to want to try to hold this level. They're going to try to not let the banks collapse before earnings come out. Not this week. We have next week coming out. We have on the 14th, JP Morgan reports earnings. Goldman Sachs on the 15th. Letter C on the 15th. And Bank of America on the 16th. And GE, which has got GE Financial, part of it, on the 16th as well. This week is going to be very slow for earnings. So not much is happening. You have Yum on the 16th. Costco on the 7th. So it's more of a consumer story than coming into this week on the earnings front. Marriott, you can see they're probably going to get hurt, Marriott, because nobody's going to be spending a lot of money on these high-end rooms. Maybe there's smaller boutique names like Marriott, the smaller discount chains that they have. I forget off the top of my head. They may do well, but I don't think Marriott proper is going to do well at all. Pepsi-Cola comes out this week as well. That's about it. It's a fairly slow, benign week in terms of economic and earnings data. So it's the following week you need to watch out for. You're going to see some game playing happening this week. You're going to they need to spike these banks. Goldman Sachs, as goes the market, so goes Goldman Sachs, or vice versa, I should say. As goes Goldman Sachs, so goes the market. The way I see it setting up, you could see it going either way. You could probably see a rally going into this week in Goldman Sachs. if you see Goldman start to rally, you can bet that the XLF is going to follow. You'll see weakness in the FAZ. And the reason why I think we're going to see some weakness in the FAZ coming into this week, and we're long the FAZ, for full disclosure, we're long the FAZ. We saw a massive amount of volume on Friday, and it hit close to resistance at the 50-day moving average. We saw a massive volume, but it only closed up 11 cents. That was less than 0.5%. So that tells me that with this massive spike in volume, that there was a lot of sellers coming in as well and taking profits from the FAZ in anticipation of a further bank rally coming into the week. So if you're looking to get long the FAZ, I think you're going to have a better opportunity later in the week. So I would hold off. Let's see if we see a rally in the XLF. Then you can add to your FAZ position. And they send out an alert to our subscribers that we may take half profits in the FAZ. We have a sizable profit already. We may look to get in at a lower price. Then I'll send out an alert to our subscribers. I want to touch upon where I left off last week with a Jim Cramer call, and that was with NVEC. You'll remember that on 9/24, Jim Cramer said, buy NVEC. It's a speculative buy. If you listen to Jim Cramer, you'd be down 5% right now. This is where we stand with NVEC. This is where it closed on Friday. This is where he said to buy it here. This, I said last week, this is a stock that looks like it's going to rally and then fail and roll over, which it did. Go back to my last week's commentary. It's exactly what happened. Yesterday, Cavuto on business. I happen to be a big fan of Neil Cavuto. This is no knock to him, no knock to his program. But Adam Lashinsky came out yesterday and he said, buy Marathon Oil. I don't know what this guy is thinking. Marathon Oil is breaking down. This is not a stock that you want to add right now. This is a stock that's breaking down. If you see a rally up to this uptrend line, that's a safe bet. You can go short and put your stop loss just above this uptrend line if it's able to recapture it. Otherwise, this stock is a short. It's a short if it breaks below last week's low of 30.39. So again, this stock is not a buy. I'm very, very surprised if these guys are making these types of calls. It's irresponsible. So please, if you watch the show, you plan on buying MRO on Monday morning, please stay away. Okay, this is no time to be buying these stocks. Charles Paine, who I happen to like personally, he's a nice guy. He came out yesterday on the same show, on Cavuto's show, and he said, buy Dollar Tree. Why? You know, why? Look at this. I did a composite of the RTH. This is the retail holders. You could see that the RTH is rolling over. It showed you the chart earlier that we had that key reversal. And you see a head and shoulders pattern setting up here. You see another low on Dollar Tree, and the stock is going to break its uptrend line. You can argue that it already did last week. I'll give Charles the benefit of the doubt. And you know what? Maybe he's of the opinion that it's up against its downtrend line, its uptrend line. It's a good buy. But what Charles should have said is you need to keep a tight stop loss order. If it makes another weekly low, then you've got to get out of the position because it will have failed. It will have broken trend. So please be careful. If you're going to listen to Charles's call, fine. Use a stop loss order just below last week's low of 47.54. This is where these guys fail. They tell you to buy, but they don't tell you where to sell. So please stick with the contrarian trader. If you want to exit a trade, we're going to be there to tell you when to exit that trade. We tell you to exit when we tell you to buy. This is what we're looking to exit. We wouldn't tell you to make this trade without an exit strategy. That's rule number one. This is a business. This is not a game. So please, be very careful when you listen to these guys. Our short watch list. We're adding MJN, Mead Johnson Nutrition, to our short watch list due to its entering an extreme overbought position. Is it a short right now? No. Do not short this stock, please. You could probably see a further upside to this stock. I wouldn't buy it unless you're a really disciplined trader who's going to use a really tight stop loss or trailing stop loss order. I wouldn't do it. PZA, we're looking to add this to our short position more. We already shorted. We're going to look to add more. Look at the inside day last Friday. We're going to look to add more. SLXP, Salix Pharmaceuticals. We're going to look to short this position. Do not do it now. You'll probably see further upside. Folks, I'm overdue on my 10-minute time frame here. Hopefully they don't cut me off. Please subscribe to the Contrarian Trader, 14-day free trial offer. If you have any questions, please send me an email, bob@thecontrariantrader.com. Have a great trading week. Bye-bye.